3, 2, 1. Check it out.
All right. Hello, everyone. Hope everyone's having a good day. Today we will be talking about volume price analysis. Before I start, I do want to say quiz questions will be asked throughout it, not at the end, so I can kind of reemphasize things that people get wrong, and we can kind of backtrack in case people have questions. I will probably be looking at questions towards the end of each segment. There's around 4 segments so that we can make sure we 100% cover all the questions for each segment before we progress on to the more, I guess you could say, advanced stuff. So if you do have any questions, hold them off till we get to the question page, or if you're going to forget them, just throw them in. I can scroll up and check again, but there is a slight chance I will miss it. So yeah. There is there is like 2 or 3 slides with questions immediately on the bottom, and I might not be able to explain it yet before somebody answers. So in case somebody already knows the topic and already knows the answer, we'll just say they get the advantage because they did the homework. So that's what we get. So it might be a little bit unfair, but in the end, they probably did the homework, so we can go with that. All right, so to get it started off, just a quick overview of what is volume. Don't worry, this won't be full of text. This is simply just, I kind of have to get this across so you can understand what we're looking at.
Sorry, Sandra, before you get going, for a reminder of our new book under the study section where it says homework syllabus, that's where we place the pre-homework every class. So y'all, make sure and do that. The way it goes is you read over the homework and then we do the class and we cover it and whatnot. So just a reminder on that. Sorry, Sandra, go ahead.
Alright, so simply, first off, we're just going to talk about what is volume. I'm sure you could read what's on the screen, so just go ahead and do that so I don't just read off the board, essentially. It's important to note that when we're looking at volume, we're essentially just looking at the number of transactions of shares, and with that being said, we're also looking at liquidity. So when I say liquidity, I mean the amount of shares, the amount of back and forth transactions. And what we like when we're doing volume price analysis is more liquid, higher liquidity, greater liquidity, more transactions, more volume, because then you can kind of follow the rules of what we're going to be going over today. And some examples, they're a lot more obvious on tickers or securities with more volume, especially retail volume. One that I like a lot is Tesla. That's probably the most retail traded stock in the stock market. So yeah, hopefully you got to read through that. I will re-emphasize on the bottom, the higher the volume during a price move, the more significant the move, and the lower the volume during a price move, the less significant the move. So next. There's like around 2 or 3 slides. I just want to go over supply and demand really quick to emphasize that, and I will say this multiple times, it is important to use this edge of VPA when you're approaching a supply or a demand. I'm assuming you can see my cursor. Don't be targeting any trades around the middle of the chart. You want to be using this towards the supply or towards the demand that gives you the biggest edge. It is important to note as well that the market only trends out of the supply and demand zones, so you could essentially say it breaks through these zones and explores. 20% of the time it trades. The other 80%, it's bracketing, or you could just say range bound between the main supply and the main demand. So target the extremes, target the demand or the supply, give yourself that edge, and use the volume price analysis as confluences, more so where this would be used at. You're going to be targeting the extremes. I do want to say before we move on is after this, I will be talking with UK Rob about supply and demand after this class, and we will be going over some examples, and I'll be live charting. So if you don't understand supply and demand fully, don't worry. I will be going over that afterwards. So if you felt like you kind of are left out here, just understand that as long as you comprehend volume price analysis itself, we can get to supply and demand later, and you're more so applying the concept to the area of supply and demand. The where supply, where's demand. We will find that out after, but don't worry about it. And yeah, just pull the trigger on the easy days. So days where it's at demand or at supply, where you can more so assume what it's going to do, and lay off the gas on the hard days. Don't be full porting or doing stupid plays around the middle. Wait till you at least have some type of edge relative to just the graph and the context of what's there. At least do that for the very least. Here's just the exact same picture of what I drew out before. This is kind of just more of a realistic chart you would see probably on the market every day. As you can see, the ceiling is the supply, and the bottom is the demand. Or you could say the ceiling and the floor. It's the same thing as support and resistance, by the way. So we have our first question. What is the market doing 80% of the time? Okay. Hans gets that one. I don't know who wants to keep track of it. Range bound, yep. Ranging, range bound, bracketing. Exactly. You got the idea. It's within that zone that we were going over before. It's simply just bouncing between supply and demand. Perfect. So before we hop into volume price analysis, I just really wanted to emphasize that that was the main application of such. Yes, you can use it on days where there's not going to be extremes, and it totally works, don't get me wrong. But when you're using it towards the edges, it's a lot more viable, and you'll see why later on. So yeah, last warning, there's no going back. It's now time for volume price analysis, so my buster's broken, I knew the answer. So yeah, if you're scared of what's to come, this is your last warning. You can get out now. So I simply the question 2 is on the bottom. If you think you can answer it now, go ahead. But I'm gonna explain this quick. So if you have small volume, then there's a small number of shares being traded. There's a small number of transactions, which would result in a small candle, as you can see here. If you have larger volume, as you can see here, you get a larger candle. You get a larger volume, as you can see here. So we kind of have a candle here that's in between the small volume and in between the small and large volume. So let's see if anybody got it. Yes. Snee trades, whatever. I'm sorry for mispronouncing your name. I definitely am. It is B, simply because it's in between the two candlesticks, so you would expect the volume to be between the two candlesticks as well. You essentially just want to see a volume that matches the candlestick. So if there was a large volume, aka a large amount of shares traded, you would see a large candle. Kind of compare them, put them together, it makes them match. They do correlate. So I'm just warning you, the next page is going to be another question at the bottom, so keep your eyes out if you're one of those people that likes to get ahead. Oh, not yet. My fault. It's coming up very soon. So, coming back to this idea of the candlesticks matching their volume, so they're true. There's no lies. We can see what they're saying, and we understand what's going on. Everything's true. There's no lies. We see bigger candles with bigger volume, so everything's happening true here. Bigger candles, bigger volume. The trend is being supported, and the candles are real. Meta World, if you don't mind, could you mute your mic unless you have a question?
I'll DM him.
You can server mute him if you double click his name. So yeah, essentially, you have a small volume with a small candle, medium volume, medium candle, medium volume, medium candle, large volume, large candle. The idea here is just essentially that bigger candlesticks and increasing trend is being validated by its volume, and it works for both up and down. Red candle, green candle, as this case it's blue though. So yeah, rising prices and increasing spreads on candles, but you also have the rising volume. This is a trend that is supported with volume. I hope It's not annoying me going over this. This should be extremely straightforward, except essentially larger volume, larger candlestick, and you're just matching them together to validate the trend.
Callé, que lo ponga a buscar ya.
All right, I'm
Callé,
gonna circle it.
cabrón.
So okay, yeah. So there's a trick question. There's actually 3 answers to this one. So whoever gets the 3 right, you're that's yeah. What volume doesn't match? ABVC. Oh, my bad. So yeah, anomaly. I don't think anybody's got it yet. Oh yeah, Lodi Pack got it. Did anybody else say that? ACD? Nope. Lodi Pack. Nice job. Awesome. Yeah, so what was going on here is just it's not B. It's the same thing as before. What volume does not match the candle? It would be A, C, or D. You get kind of small volume here, which would normally match up to this candle, but we're looking at anomalies. What doesn't mess up here? Or what doesn't match up here? So an anomaly is a candle that doesn't match the volume. Oh, okay, I'll go over that at the end. So we see here, we have this large candle, small volume. That's an anomaly. The volume does not match the candle. We see here, small volume, or small candlestick, sorry, large volume. They don't match. So what we're looking for, so we have a medium candlestick. So what would match is medium volume, but we're looking for what doesn't match. So we would not want to see small volume, little to no volume, or lots of volume. Oh. Just use the arrows here. So here is essentially what I was just saying, but it's a little bit more, a lot more examples. This is probably a little bit more confusing. We're essentially just looking at bigger candlesticks with bigger volume. This looks validated. They're good. Bigger candlesticks with the smaller volume. Those are anomalies. They don't match together, so it's not good. Something's going on here. We see here smaller candlesticks with smaller volume. It looks good. Everything matches out. And we have larger volume with smaller candlesticks. There's an anomaly. They don't match. So, going with the idea of the trend that we were talking about before, with bigger candlesticks, we would want to see bigger volume as well, a larger volume. But what happens with our volume here, with the increasing trend, is our volume's actually going against the trend. We have decreasing volume, but increasing candlesticks. So essentially, the volume is not supporting the move. So something is going to be happening here very soon that we will be going over. Low volumes and big candlesticks are signs of reversals. Yeah, we'll be getting towards that, and I think probably the next slides. So yeah, define anomaly in volume price analysis terms. What is an anomaly? Question number 4. Unusual, yes, but how so? Discrepancy between volume and price. Not volume and price. It's not price. Volume is right. The candle, which has different volumes. Okay. Candles don't match volume. Oh, okay. Yeah, Danglewood got it. So yeah, Danglewood. UK Rob, it looks like you got it. Brandon James looks like you got it. It's important not to say price because that's just, I mean, price is just simply a number. We're looking at a candlestick, we're comparing pictures essentially, not numbers. So yeah, give that one to, yeah, candles don't match volume. Danglewood gets that one. Okay, so yeah, anomalies equal reversal. Let's see who. Somebody said so. Yes, Snake Trades. You were onto this one. Anomaly or anomalies equal reversal. Now it's important to note that this. I didn't write this down, so listen to me here. I know people who strictly trade using volume price analysis, and they do not use any type of support and resistance or anything. Their charts are completely blank with simply just the chart on candlestick mode with the volume indicator on the bottom. Simply because they use the daily and weekly time frame, and there's enough significance behind the anomalies that they can tell what's going to happen. So it's important that if you're looking at these in a lower time frame, or even a larger time frame when these occur, you kind of want to have evidence. So think of yourself as a crime scene investigator. You're trying to connect the dots here. You want to have maybe one at the beginning, or one anomaly at the beginning, a second anomaly around the middle of a trend, and then a third anomaly at the end. So you're kind of looking for more than one or more than two, maybe if you're on a lower time frame. However, if you are on the daily, you could honestly just use one candlestick, and there is probably a good chance that there will be an anomaly, especially if you're looking at a highly liquid stock where manipulation is easier to tell what is going on. I suggest looking at SPY if you're going to practice this. Oh shit. Okay, yeah. So this is what it would look like if we're looking at a correct turnaround, if we're looking for a reversal that is legitimate, and we're not looking straight for anomalies. Now, however, it's important to note that there is reversals in both sense. So you can have a reversal based off anomalies, but you could also have a true reversal. So you're kind of getting both bangs for both bucks. I'll show you what volume should look like here, and we're not strictly just looking at anomalies. So we have what's called stopping volume. As we're approaching what we were talking about before, this would be demand on the bottom. As we're approaching that level of significance where we would expect there to be buyers, we can see that we have the lower wicks are deep, and they're let's assume that demand zones down here, they're kind of reaching down, and we're getting less of those pure red candles, and we're kind of getting increasing volume, showing that let's say the red are sellers here. There's less sellers, and the buyers are coming in. So we're essentially looking for a turnaround here. We kind of get these stopping volume. They're holding the prices up, and they're about to push it back up again. So again, same thing as this. So if we get a big wick near support and demand zone, it's also an area of high volume and liquidity, right? A support or demand zone would be, yes, but it doesn't necessarily mean you would have high volume. You would want to see high volume. That would be what you would be looking at right here. You'd be looking at either a stopping volume or topping out volume. But like we were just going over before, you can have those anomalies where you kind of just go up on that low volume and something's due to happen. And what's going on with that is, so with this, you can kind of see it's more of a slow curve around, and you can it's more predictable. When you have the anomalies, since it's kind of, I think of it as if you're lying to somebody, and then all of a sudden one day your cover gets blown, and then all hell breaks loose on you, and like they just start going crazy on you. That's essentially what would happen if we were going off of anomalies. So the price is going towards it, the candlesticks are getting bigger, the volume doesn't match, you're lying, and then all of a sudden they find out, and then boom, it goes right back down. It wouldn't be a smooth come around. It would kind of be very, very quick. And it would be kind of either a rug pull for the bears or the bulls. It would just be extremely done. That's how you get the quick trades. So with topping out volume, it's the same thing. Wicks are on the top half this time, and they're kind of pushing it down, kind of like an archway. But we do have that rising volume indicating that sellers are coming in and the buyers are dissipating. So next here, this is kind of similar to what we were just going over. However, this is like the next step of true candles. So let's say, by the way, this is she messed up. This is from Anna Cooling. She messed up by saying areas of high selling volumes. These arrows should be up here. This is like, imagine the high selling volume would be up here. So anyways, so yes, you're testing the market. So imagine the demand zone is down here. Imagine this is where you'd expect volume to be a lot of buyers. So you're coming down, you have some true candles, you're coming. There's no lies here. And you might be thinking, oh, okay, we get a small candle. However, it's really important to note here, we're looking for lies. We don't see a lie here. We see a small volume with a small candle. This is true. But it's also important to write down that for some reason, the sellers it's almost as if they knew. And you'll see this more often than not. All the selling pressure, and then they kind of just like disappear right when you get to the demand zone, or all the buyers, and they kind of just disappear when you get to the supply zone. And then boom, you'll have this test, I guess you could say. And if we were trying to continue down here to start a trend, the trend is rejected. We still have these buyers loaded in this demand zone. They just push it back up immediately. We would have to run these buyers out before we could eventually come back down. So same thing essentially right here. Say if we're trying to trend upwards, and we kind of have these low volume pullbacks. There's not a lot of sellers. This low volume candlestick with low volume candlestick, small candlestick, low volume, and then we have this increasing trend with these larger candlesticks, and it looks like we're going through. However, we test the water here, and immediately, as soon as we wick into the supply zone that we imagine right here is at my cursor, areas of high selling volumes, like we see here, boom, rejection. We don't even necessarily have to give the small candle a test, but this is more so what you would expect to be happening when you see a zone. So unless there is extremely high volume, which I will go over this later on, you're kind of more so anticipating a rejection. So keep that in mind. Remember, this is for confluence, so you can trade this purely. You can purely trade VPA, but I highly suggest doing it on a daily or weekly time frame. You're more so applying this to a supply and demand background like that. Imagine you're building a house. Supply and demand is your foundation, and one of your walls is, or one of the sides of your house is VPA. So you're kind of using it to build up. So imagine we're pivoting between the supply and demand. This is just another way to see a kind of rejection reversal. The idea here is that we're looking for reversals. The reason why I say this is because, like we went over before, is we are bracketing or range bound or sideways for 80% of the time. So 80% of the time you're going to be trading. You want to have more ideas behind what would happen at these areas here. What should I be looking for? You want to have there's going to be different things. You want to have a playbook that's pretty large. So you can probably, I don't even necessarily probably have to explain this. Essentially, just you wick into, this would be the supply zone up here. You get that candle. You would assume this has higher volume than usual, and then we come back down. You look into the demand zone with red candle, and then we come back up. More so, these are just things you should be looking for when going into the zones of, you would assume reversal, either supply or demand. So yeah, just keep it simple. These are just things you should be looking for. We call these pivots. So yeah, we have our price region, I guess you could say. Once you get two of these, yeah, after a trending day, this is what you would be looking for, and which we'll go over that, don't worry. So another thing to put behind the idea of reversals, and this would work the exact same for a demand zone. This is just going over supply zones. I think it's called, I want to say, Dragonfly Doji, when it's upside down, and say if there was blue up top here and it was a wick on the bottom. So imagine you're coming up to the top of a zone and it's a supply zone. We would be looking for shooting star candles as well. Now, it's important to define what a shooting star candle is. It essentially just indicates a weakness in the trend. However, you can have, it might be called a hammer. I honestly have no idea. I'm horrible with candlestick names. So essentially, just all I know is just matching the volume of the candle. That's how I define my candlestick names. So you can have a low volume shooting star candle, but it's important to know that although it does show weakness, if you truly want to see weakness, you would want to see the ultra high or above average volume. So say, we'll come back to this slide in a minute, but say we broke out of that bracketing phase and we're kind of looking to establish a new area of, so we're trending now, we're kind of looking to establish a new area of bracketing. We would be looking for a top that has either one or two or maybe three of these shooting star candles, or whatever you call them. It essentially doesn't matter. We just know what they look like. Just the candle that looks like this, I guess you could just say. And you can use these as confluence as well. So put that in your bag. as long as matching up the volume and everything makes sense. High volume shooting star candles are a great indicator of reversal out of the supply zone or the zone on top. And whatever you guys want to call it, inverted doji, hammer, dragonfly doji, yada yada yada. That would be on the bottom. So if we were going down here, we would be looking for those in the bottom to define another area on the bottom. So this one might be harder to answer, but we did go over it before, where we're kind of emphasizing the foundation of BPA. Where are we targeting these reversals? Yes, exactly. UK Rob got it. Supply and demand. Yes, everyone's getting it. Let's go. I'm glad everybody understands that. If only you didn't say zones, man, you would have had it. So yeah, it's important to note that we're really just building this off of supply and demand. You don't want to target the middle of the trades. Don't pull the trigger on the days where it's going to be hard, where you have a 50% chance of going up or going down in the middle of the bracket. You want to be targeting the bottom or the top. So yeah, give that one to UK Rob. You got that one right. So yeah, we have here, I think actually a lot of you guys are, yes, range bad. Well, range is good, but in the middle of the range, bad. Put that on your like wall or something. So we have here that breakout that we were talking about with those pivots. So we finally break out of the range, and we wouldn't want to be trading in the middle. Range bad. Range bad. I love that. So we break out of the range finally, and we see this super high above average volume. Now, I was talking about we would go back to that thing before. This is what I was talking about. So you might be approaching a top, but if you have really high volume, there's a better chance that you would be going through it. So say if over here when you're at the top, you only had volume that was kind of up here on the candles, on the volume histogram. So you're essentially, you kind of want to add up what's going on with the volume compared to what happened with the volume before. So although you might be approaching this supply, if there's really high volume, take a step back. You don't have to trade it. There's hundreds of other stocks that you could be looking at, and I'll go over how to make this efficient afterwards. So yeah, take a step back and don't feel like you have to get in just because you're approaching a supply zone. Don't feel like puts have to work. Now we do see here, after we break out, we kind of get this pivot high down to this pivot low. So my biggest tip for anybody who follows called candlestick patterns or chart patterns, whatever you want to say, just patterns on the chart, is if you were looking at a bull flag here, and if you get a bull flag on low volume, more often than not, you are going to see that bull flag work out. You want to see low volume bull flags or low volume bear flags. If we were to break down below here, that is like a super important thing to note. If you're truly playing using candlestick patterns or chart patterns, whatever you want to say, look for low volume when following bull or bear flags. So yeah, we get this low volume flag here, or low volume pivot, and then immediately, as soon as we start to break out, before we even get to the pivot high, we already see that super high rising volume again, and we see that the candlesticks would be matching the trend. So yeah, this is essentially what I was just showing before, but a little bit more realistic. You wouldn't just see a chart just blast out like this. This is more so what it would look like. As you see in the beginning here, we have that low volume pullback right here, and then we have this blue area. It breaks through with super high volume, low volume pullback again, yada yada yada. Rinse and repeat. We're looking for the volume to match the trend and the counter trends to have low volume. So if you're going to write anything down, write counter trends to have low volume if you're looking to play on a trendy day. You're trying to join in on the trend. So here's the same exact thing, but on the opposite end. So this would be more so what would happen more often than not. You would break out of the level, and then you would come back and retest it, and then you would have a huge volume spurt. This is what you would really be looking for. If you were gonna create a plan using volume, VPA, or just simply playing supply and demand, if you have a breakout, do not just join in on the trend. More often than not, you will get gypped out. You want to play the do the smart thing and enter on the retest. Retest more often than not works a lot more. So yeah, just putting that out there. So here is what we call selling climax and the buying climax. I like to call it like the bait and switch type thing. So we're kind of coming down into this accumulation or just sideways zone, bracketing zone, whatever you want to call it. It's essentially just an area of bracketing. The market goes from trending to bracketing to trending to bracketing to trending to bracketing. Those are the two phases. So we come back down here to the bracketing zone. And as everybody would want to see, we're at the supply zone at the top. So everyone's going to be betting on the sell, betting on the sell, betting on the sell. You see these extremely high volumes because what's happening is everyone's betting on it to sell. They're all short. But what are the market makers doing? They're buying in. What is everyone doing over here? And so eventually the market breaks out to the upside, and then people would have to close their shorts for a loss, accelerating the upside move. Same thing happens here. You would be expecting people to be going long here, and then people go short. So you're kind of doing the mix match. I have absolutely no idea what the Darvas box theory is. Sorry. So yeah, we're kind of looking for these areas. More so, don't even worry about like the whole picture. Just look at areas of long wicks with high volume. Long wicks, high volume, and you can more often than not find these on the weekly. Don't really care about the daily. I find it a lot easier to find these on the weekly. You'll often see like 2 or 3 next to each other, and you'll be like, oh, wait, this is like at the top of a trend where we're going into supply as well. Like something's going on here. We're going into demand, and I see like super long wick, the high volume. What's going on here? It looks like we're heading for reversal. Yes, exactly, sir. So, what would volume or what should volume look like on pullbacks? Question 6. Countertrends have low volume. Damn, what the fuck? Yo, that was really fast, Brandon James. I don't know what was going on with your buzzer there, but that was ridiculous. I don't know if you like hacked my shit or you basically had you fixed it. Yeah, someone is cheating. I think so as well, Salim. That was a little sus. He had that typed out before I even like I don't know, that was crazy. I think it was. Wait, does everybody have 1 point now? Okay, I'm gonna have to make up another question because I think that was the last question. Yeah, that was definitely the last question. I typed when you said it right to write it down. Yes, there you go. So that was actually the last slide. Or this is kind of what the market would be looking like here. So I'll think of another question because I don't know if you want to give it to 6 people, but you can. I mean, it's not really my choice. So this is what the market would more so look like from ranging to bracket, or my fault, trending to bracketing, trending to bracketing. This is what we're looking at here. This is a really zoomed out picture. So we come in here and we have this supply zone on top, demand zone on bottom. We have all these pivot highs, pivot lows. We're looking at the retest here. We're looking at these low volume pullbacks. We're looking at these trends. We see the buying climax here, selling climax here, and this is what we're getting at here. This is essentially how your market is going to look on an ideal day. So yeah. Anybody who has any questions, feel free to ask them now, especially if I just kind of not necessarily ignored you, but just zoomed over your question. Oh, okay. What if a trendline break happens on between zones? Should we go after it or lead it? So you're saying that in the middle of the bracket zone is where your trend line is? Is that what you're saying? So I'm assuming you're saying, let me pull up draw really quick. Oh, wrong one. So yeah, I wrote middle E's. Let's see what's that search history. So let's just say you have your supply on top. So let's say your trend line, like it's a good trend line. I want to emphasize, don't make any trend lines and play them unless they're on the daily or like 4 hour or hourly. I wouldn't necessarily use them as super big zones of influence. So anyways, let's say you have your trend line here and it's coming through the middle of your supply or demand zone. If we get a break through it, we would want to be playing the retest and then a bounce. If you're going to be playing anything, play the retest. Always play the retest. If you break a level, like if we were to be breaking the supply right here, we want to play the retest for the bounce. We don't want to be just entering in aimlessly. It's our ideas here are are built behind the idea of bracketing. The market is going to be going sideways. Okay, think of it like this way. So you're going on a vacation with your family. Imagine you're younger, and you've been sitting in the car for hours. You finally get to wherever you're staying, and let's say you got like you're renting out a house on Airbnb or something. You bet your bottom dollar you're going in the house and you're exploring first before you go grab all the bags and throw your shit in. You're running inside the house immediately, and you're going to be exploring. So that only happens for like 5% or 10% of the trip, or like the time that you're there. Not even like you're only running and exploring and going straight through the house for like the initial moment. Like it's a very small amount of time, and then after that, 80% of the time, you're going to be finally settling into the rooms, finally like looking at certain things, figuring out what's going on. You're kind of like exploring the in between, the nooks and crannies during that 80% of the time, and then 20% of the time you're going out and traveling around. So the main ideas here are to be used in this ranging period. However, if you are to be breaking out, look for the retest. We want to see a retest to enter. Don't enter like right here, or right here, or right here. Enter at the retest of the zone. I will go back to this. It's important to note when you break out of these zones, I would write this down as well. If you break out of these zones, so say you break this supply zone and you're now on top of it where my cursor is, this supply zone that was once on top of us, that is now below us, would be acting as a demand zone. So play the retest. Yes, exactly. So if you break down from the demand, it would act as a supply. I was going to ask that question, so good thing you already put it down, because you would have sniped it. So yeah, there's not really too much more to say. If you have any questions, feel free to put them out. It's more so, it's pretty straightforward. It's a great technique to have behind ideas ideas of reversals, and more so just putting it behind supply and demand, looking for true volume, true candlesticks, trying to make the chart tell the truth. You're analyzing it like a scientist. You want to see what's really going on behind the scenes. Now, it's really important to understand that with volume, you're seeing more often. Yeah, I think that should be everybody. With volume, you're seeing everything that's going on. You're not like there's nothing that's just flying by you. I mean, yeah, you could like talk about the dark pool and yada yada yada. Either way, this is like you're seeing what's going on, and this is the truth. So, or it allows you to have access to the truth. It allows you to see the full picture. So if there's a lie and the candlestick doesn't match up to the volume, you will know, and you will see the rejection. It will happen. You'll probably be very surprised. I'm gonna have to. Oh yeah, now Brandon James definitely had one. He did cheat. Uh, I'm kidding. Yeah, give him one. Yeah, so you can see the truth here. You understand what's going on with these rejections. Use them at supply and demand zones, and give yourself the edge of truly seeing what's going on in the back. Use the volume. The volume is your best friend. That's why I always say, may the volume be in your favor at the end of my write-ups, because I'm a volume guy, and I want the volume to be, I want the volume to be truthful behind your idea. I want it to be on your side. You could look for the truths, but you could also look for the lies. So, that's realize kind of lies more. If you're cheating, you're trying. That's actually the truth. You want to ask one more. All right. Let's see here. All right. So, what does the selling climax indicate? That's the question. What does the selling climax indicate? What's coming after the selling climax? All right. Snake Trey's got it. Downside. Yep. He's the winner. So, congrats, Snay, or however you pronounce your name. I'm sorry, I'm probably butchering it. But yeah, you won today. Yes, reversal. That works as well. Love, much love. Good job, man. Yeah. So, I do want to say, all volume is relative. So you can have one chart, one stock, I should say, that is super liquid, and mind you should be playing liquid stocks at least like around 2,000 volume per candlestick. Anyways, all right. So you could have stocks that might have super low volume, but they could be indicating like a supported trend with their volume. Don't look at the numbers unless you're just looking for liquid stocks initially. But once you start doing analysis, you're just looking how the candlesticks are compared to each other on each individual ticker or security, whatever you want to say. So the volume is relative to each stock. They are also relative to each other when you're zooming in on each stock. So you would be comparing these volume candlesticks to each other to find what the average is, so you can figure out what's above average, what's below average, if things are being supported or if they're not. Imagine if you're yeah, exactly. So yeah, don't only be looking for kinks that had a reverse or upside or downside in the volume. Yeah, I got you. Don't only be looking for supports, look for anomalies as well. Just look for truths and lies. You can use this like behind every single little thing. There's always something going on behind the scenes that you can find with this. There is an example on CAD here. Yeah, here we go. So, okay. Sorry for my candlesticks probably look weird to you because there's red and green on each candle. This allows me to do double the amount of volume price analysis. So like I can see decreasing red or decreasing green, but I can also see like increasing red. You know what I'm saying? Like I can kind of see two. It's like essentially two histograms combined into one. So the main idea that we're just looking at here is just we have a kind of trend going. First of all, it's going into a zone that immediately wicked out of in the morning. It bounced straight out of it, so we would label the zone, and then it comes down. It's falling in. You could say a wedge. That's another thing of confluence. If you're going to be using that, you can see here that the trend's kind of dying. Something weird's going on here. We get one of these, but it's a weak one, like we were talking about before. It's a weak. I don't know what this is called. Like shooting star, I think. I don't know. It's weak one, so it's not necessarily indicating a huge downtrend, what is to come, but something's to happen. So we finally get down to this zone, and we get a huge volume, small candle. Something's wrong here. Why is it so small, but there's this massive amount of volume? What do you know? It's right at the demand zone or support, as we can see here. And then right after, we get a bounce and we go up. Hopefully that's a good example. And you can see this green candlestick, or this green volume right here, matches this candle right here. It's the truth. So a buy went into a truth right while going into a demand zone. Hopefully that makes sense. But yeah, that's about all I have to say, I think. I hope I helped you out in some way. I'm going to be talking about supply and demand after this. I'll be showing my friend UK Rob, doing some live charting and kind of going over how I find my levels and find the true supply and demand, looking at a bigger time frame.
There's a question, standard. Oh, wait, okay. No, that was, do we have a session lined up for volume profiles of sessions and particular ranges by Canadian? Will be giving a class on other stuff as well. I'm sorry, go ahead. I thought that was a question, standard. Go ahead.
Yeah, I'm simply just saying, I'll be going over supply and demand after this, so if you need help figuring out supply and demand, yeah, exactly. Join in this class for supply and demand if you don't understand it, or if you just need help, like figuring out levels and figuring out how to truly find good levels, like looking out in the bigger time frame, finding yourself an edge of, you could, if you look enough on a bigger time frame and you're good enough at figuring out supply and demand, you could truly just use supply and demand. You don't even need volume price analysis. If you're a sniper, I like to say. So yeah, we'll be going over how to make efficient supply and demand levels using them on a larger time frame, giving yourself a big range between the ultimate supply, the ultimate demand, and giving yourself 1, 2, or 3 levels in between. I hope everyone.
Well, I don't know how I feel about this, but I think you just broke our class attendance record, standard. Damn.
Damn, son. Holy shit.
Awesome job.
How
I'm
much?
happy, but I'm like, what the fuck?
How many people
I
are in
love
here?
that. You did really, really good. I'm very, very proud of you. You did amazing.
Oh, so, thank you. I just want to add on to volume price analysis. If you understand everything I went over today and want to get into more complex stuff, feel free to DM me. I kind of went over like 101 to like 201 level course. However, there's a good like there's like a 300 level and 400 level to it. So with that, we would kind of be comparing time, like doing time frame analysis, looking at lies spreading through time frames. I will be talking to you about how like more in-depth analysis on how you can predict moves, truly seeing candles using this indicator. Yeah, throw questions in chat. I'll be going over how to use this indicator. Um, I'll go over an example with you of me and Canadian. How we were talking earlier about how this reversal was going on. There was anomalies, or this is SPY actually. Or yeah, what was going over SPY. We saw this and we called this out simply just by using volume price analysis and nothing else. That's the advantage of having this indicator. It's called volume pressure, and to being able to have the double histogram and analyze charts that way. But yeah, after this, I'll be going over supply and demand. So,
Real quick, I love that our people, Kron, myself, our market specialist, yes, we offer that our DMs are open, but here's something we're struggling with. We created the back to basics, for people who are newer. That wasn't saying that you couldn't go to Trading Ground, because absolutely you are who you hang out with. So you definitely want to put yourself amongst, the more complicated stuff as well. You may not understand it all right then, but it'll all slowly start to click, right? I started learning the more complicated stuff before I did the simpler stuff. And as I went, it just started clicking. But going to the DMs, literally, we've had meetings trying to figure out how to get our newer people to, well, not newer to the server, but, newer to trading, how to get them active in chat. Because it seems like they're all going to the DMs, and, it would be helpful for others to see, y'all asking the simpler questions, and then they'll feel comfortable. I mean, I put myself out there asking simple questions, and I'm an owner. I mean, it's very well known that I'm still quite new. And so we just want y'all to try and, ask those questions in Trading Ground. It's not just for the advanced talk, it's for everything. We're all here learning and growing together. Standard and Brian and Whisper, they're learning from each other. There's nothing wrong with learning from others, and don't feel like they're way above my head and, yada, 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 because they're learning too. You see them saying, oh, thanks, I didn't know that. Oh, blah, blah, blah. We're just on different levels. So please, please, please feel free to go and chat and ask the questions, no matter how newbie or basic or whatever you feel it is. Put yourself out there. We're trying to get that conversation to chat, so that others looking can see, and so they feel comfortable asking as well. Thank you for pointing that out, Canadian.
Yeah, do you want to say, I guess it looks like I'm free to do it as well, so we'll be creating our weekly watch list or daily watch list as well after this. So if you want to understand how we go into the watch list, I'm sure Canadian would be more than happy to share his screen, and he'll be doing that. And while I'm going over supply and demand really quick with UK Rob, I'll actually, what I'll do is I'll literally just chart the watch list and teach while I'm doing it and how I find these levels, because all I do behind the watch list is I find supply and demand levels. I find the ones where we're at the extremes, not in the middle. I think, yeah, Army Dude, you understand. I can tell Army Dude's gonna make some profit in the future because he understands that you do not target the middle of the chart. It's the worst thing you can do. You literally just target the extremes. So I'll be going over how to, not even necessarily how to find charts at extremes, but looking for charts at extremes, trying to find the extremes and define them, and on what kind of time frame to do them. And then we'll be going over the watch list, and at the end, and I'll show you how I make my levels. I'll show you some other things I use, and yeah, I'll really just give you the complete breakdown of how I create the watch list. Keep in mind, this watch list has been extremely accurate, and all I personally use is just basic supply and demand with volume profile and maybe market or like pivot anchor volume profile. So it's really it's nothing really too complex. I do all my levels before, and then I put on the volume profile and I readjust in case I'm off by like 50 or 25 cents. And then I throw the watch list up, and I'm going to show you guys how to be efficient and find those levels that provide good extreme reversal points and can give you an edge. So yeah, if you want to stay in, we're going to be transitioning over to literally right now. Me and UK Rob are probably going to be talking. If I highly encourage you to unmute your mic. Anybody else, but me and UK Rob will probably be chatting back and forth about supply and demand, and then we're going to go hop into the watch list. So, yeah, Canadian, you can throw up your screen if you want right now. But yeah, let's get started on supply and demand and the watch list. UK Rob, if you want to unmute your mic, we can get started as well. But yeah, anybody else who has questions, unmute your mic or type it in the chat and at me. But yeah, we're going to be transitioning over right now. So if you want to end the recording and start a new one, Frederick, but I would imagine you have stuff to do. So yeah, cut the volume price and also this one off now.
Thank you so much, Standard. You did absolutely amazing. I really, really enjoyed the class. I love how you did the questions in between, and congratulations, Sneh. So now, so far this month, we have Danglewood with 1 win and Sneh with 1 win. But we still have a few more Sundays left, so it's still up for grabs. But y'all did amazing. I love it. Like he said, they're going to stay on, and start on the watch list and go over some supply and demand stuff. So if y'all want to stay on, but again, thank you, Standard, for stepping up and teaching class, and whomever else wants to step up and teach a class, something they feel they're very fluent in. We've had DV Trades and Little Ronnie, all step up and teach classes, and so it's super exciting. You did amazing, and thank you everyone for coming. Whoever's going to stay on, more than welcome to stay on and watch them, and if not, y'all have an awesome rest of your Sunday. Thank you for allowing us to be a part of your journey.
Yeah, anybody who's leaving, have a great weekend, and have a good week if I don't talk to you. But I always wish you a good day in the watch list, so even if you don't see it, just know I'm giving you good luck. So yeah, time for me to sit back in my chair and get started. So yeah, Canadian, you can throw up your live as well in case people want to watch yours. But let's run it up now. That was when the fun starts. Hopefully I helped a few of you out. What's up, UK Rob? How you doing?
I'm good, man. How are you?
Pretty good.
Yeah,
Nice day.
good. Coming off a bit of a late night last night, so yeah.
You messaged the chat about your pug at like 2 a.m, and I was like, dude, what is he doing? Messing with his.
Yeah, well,
I was like, why are you awake?
As you probably know, I'm not normally awake at that time, but I'd been back to my hometown to Manchester, and it was a friend's party, so I didn't get back until late, and I don't know, I just jumped on the chat and then just got into it with the pub conversations and stuff. So yeah.
Oh yeah.
Yeah. Oh good. So yeah. Slightly jaded today.
Was the class helpful? Was it good? I feel like.
Oh yeah, brilliant. Yeah. Oh yeah, really good. Really good. And quite disappointed actually because I got that low answer right as well. I didn't get the point for it. So yeah, I do like my wins. You got to have a competitive side, don't you?
Yeah.
No, looking forward to this, right? What do you think? What you thinking of doing? Which chart?
Yeah. So you said we were talking in DMs, and you more so just wanted to like watch me go live, like more so just kind of verbalize how I'm looking. At charts. Okay, awesome.
Yeah.
So yeah, that's what I'll do. I'll literally just say what my brain is thinking. I'll tell you what I'm looking at. I'll tell you how I indicate or find these reversal points of supply and or demand. And yeah, we can.
It's funny, isn't it? Because I was doing, I did Nvidia, and I've never looked at that chart before, and it's strange how for the first time I'm looking at a new chart that I've not looked at before. I find it really difficult. Yeah, and I'm even like the basic stuff. I'm like, oh shit, how far back am I going? What range am I giving myself? Am I giving it $10, $20, or am I going back to April? Am I going back to prior to April? Yeah. But then do you know what? I just kind of reel it back in and just try and just chart what I see. Just, like what you said, just keep it simple, look for the big moves, and the time frame is the time frame, the range, the price range is the price range of just what I see. Don't try not to overthink it too much.
Exactly, I love it. Yeah, so I'm just gonna be going through a few tickers. I will say, I don't know who's still in here, but what I'm looking for mainly when I first pull up these charts is I'm looking for big moves prior, because what happens after big moves is they're trying to find fair price. So imagine you get this huge move upward. It's not just going to go sideways immediately unless there's like an earnings or like that essentially only happens after earnings or some type of macro thing where the price of X has to be Y, if that makes sense. So, however, if there's just normal volatile stock and there wasn't any news, I guess you could say, it will go up, but then there will kind of be like, it'll try to find value. So I'm looking for tickers that are finding value after a big move. Keep in mind, I always do this on the 1 hour and the daily more so. Not necessarily like like zooming all the way under, all the way out. So I don't like FSLR. It's in the middle of its range. This is kind of like the top supply over here. This is demand down here. It's mid. I mean, yeah, we could probably figure it out here. Let's see. Hold on, this as an example. So it looks like our supply would be areas where immediately rejects them. So we see a boom, mind you, we have a huge run up. I have no idea how much. This is like earnings. So earnings, it goes up X amount of dollars. What is it, like 10 or 20? Then boom, it goes up like $40 more. Then all of a sudden, for some random reason, it decided like to just stop right here. So you know damn well, we've talked about this before. Levels that can halt a huge move, they're gonna be important. So automatically, I'm looking at this level. What do you know? It kind of more so works out that this level is used once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, again and again and again and again, essentially. So you can kind of it's safe to assume that this is the main area of rejection. So that's what I'm looking for. I'm looking for areas where it just rejects right off of, or areas where it bounces right off of. So we have an area of
that rejection area. Sort of what we're saying as supply there, for instance, is what is the relevance of being like super specific? As well, I've been looking into how to draw the supply demand areas and where your placement of your proximal and where your two lines are to go. Is it that relevant where your sort of distal and proximal lines go, or is it just more important that you are, in and around, 25 cents or so thereabouts?
Yeah, exactly. You got it right in the head. You hit the nail right in the head. You're really just looking for like that range of close to 25, 50 cents. But as you can see, like obviously it's better to have a range that's super specific. Who wouldn't want that? But if you have so say we have here these levels that are immediately rejecting off kind of like the same value, then it just allows you to have a specific place.
Screams at you, doesn't it? That.
Yeah, so it's nice to have it, but if that doesn't happen and we kind of just get like wicks in this general area, like we're kind of having here, a little bit, then we can just put it as bold. Like we can have this bottom line be super specific, so we know that there's a good chance to reject here, but in case it comes through, we give it a little bit more of a wider range, and then it'll reject from the top as well. So that's more so just the area, but if everything keeps rejecting off the same exact spot, then yeah, we can just label that spot. We can just create a line or like a really small box. But with this chart right here, we're kind of making it a little bit wider here because we have this one that goes up here. However, it does seem to reestablish that this is the important level right here. Now I do want to say the reason these overextensions do happen is imagine a person like you and me. You're kind of late to the run and you want to get in. What's going to happen is there's going to be some form of excess. When I say excess, is you're going to get like this wick up to the top. You see right here it happens again. You kind of see a little bit of excess right here. You can even argue that this was a huge push up that provided this level due to excess. So you kind of get these people that are lagging behind and more so late to the show. I'm going to throw up one of these charts I have here in my notes. 1 second. I have to pull up my folder. Yeah, okay. Let me just share my entire screen here. This will make it a lot easier for me rather than just switching back and forth. Change windows. Yeah, let me move all these really quick. This is what I had to do for class. Boom. Alright, yeah. So as you can see this, right? This little chart. Rob. Okay. So yeah, you can see like between. This is like a chart of like a time frame of people joining the trade. So we have the tipping point, the chasm. This is when you're going from one type of trend to the other trend. So say if we were looking for a reversal, these people are going to be getting in early. These early adopters and innovators, they'll be early to the show. They're going to be buying right, like maybe a second before, like a little bit before we get to the supply, or a little bit before we get to the demand, but they're playing the reversal. Now, eventually, you will have this point where it comes to the tipping point where the reversal does truly happen, and that's more so when the main majority will be getting in. So, however, what does the chart show is we have all these late people over here, the late adopters, the laggards, the main majority. These are the people that are going to be creating that excess we're looking at, where we kind of get this wick up and then immediate rejection down. They're the people forming that excess. So you will notice 9 times out of 10, when there is a reversal, you will see a longer wick into the zone because there's this excess from people being late. There's these laggards, the late adopters, the main majority that's later mature. So that's what we're looking for, is that little wick that goes in. It happens more often than not. So yeah, those wicks are natural. Now we got that supply zone more so down. So we're looking for demand zone. Looks like we kind of have some type of a trend right here. So you can kind of infer that demand will be following this area up until we get right around here, kind of forming this ascending triangle. If we were to drag this all the way out, right, kind of like this big triangle. That's the picture we're looking for in the future. However, we're gonna zoom in here and try to find some good levels. So it seems like right around here we saw a big reversal. We obviously saw a huge reversal right here. We have reversal right here.
That's multiple points there, though, isn't there? Where you were just there, yeah.
Yeah.
You want
So
the 199 range.
Yeah, we like this.
Mhm.
Right. We like this a lot right here. However, we're not gonna just leave this level out because it does correlate to this right here.
Mm-hmm.
And here, let me make this a little bit easier. Yeah. So we have this initial areas of sideways. Any area where it goes sideways or completely bounces from is what we're looking at. So we have the sideways area right here. This area right here where it really bounced off from. We have this level.
Would you set that as like a lower demand level? Would you potentially have 2, or just another area of interest on the chart?
So actually, I'll show you what I'm gonna do. So this will be the ultimate demand. Like you see how on my remember how I would show you those Apple charts and I would have like that ultimate demand on the bottom and the ultimate supply on top? That's what this is gonna be right here. Because this is the like last resort. If the market falls through, it's gonna bounce here essentially is what we're looking at. So we want to have the ultimate levels, like the ones that are actually labeled supply and demand and not labeled level 1, level 2, level 3. Those are going to be the levels where we can bet our last dollar that it's going to reverse there. So this will be our level 1. This area right here where we just saw a recent reversal from. This will be level 1. We kind of have... We can... So we're moving up the chart. This is how I like to do it, moving up. So we establish the top and the bottom, and then we move up. So we've just established level 1. We're looking for level 2. You can infer that level 2 will be in the middle of the chart because it's level 2. It's 50% of the way through. Assuming that you're making 3 levels, it doesn't always work out. You might have to make 4 or 2 or 5, who knows. But we can kind of see this level, like where this gap was initially created, working out really well. So we saw like bounces all along right here, once, twice. We see the top of the gap right here. Rejected right here. Bounce right here, bounce right here. Sideways motion all within it. Rejection straight down from it. A bounce from the top of it. A gap through it. And it's kind of somewhat becoming invalidated due to us kind of like running through it more so. But safe to note that this is an important level, so we're just kind of gonna put it right in the middle. I would even argue that it's probably like right about here. Now you might wonder, like Ryan, like wouldn't it be important to have this level since, like, super accurate since we're it's like currently interfering with it? Well, yeah, so that's where we're gonna pull up the volume profile, show us kind of where the level is, to be fair. And what do you know? It's up like
Hang on.
it's up like a little bit. We're pretty close though. I mean, what do you know? At the volume area low, or the value area low is right where we put our level 1. So that works out pretty well, huh? And yeah, so we're kind of just confirming levels here. Maybe going in the 15-minute, the 30-minute look at levels again. We're looking at areas where this comes really far out or goes really far in. So you can see right here, there's kind of this huge, like this really weird, like anomaly. We're looking for the anomalies. So we see this dip right here. We're like, oh, okay. Well, would you look at that? It correlates right to this zone right here. Or we have this right here, like it's all the way the farthest out. Well, correlates to a good area of bounce all across the entire chart. So yeah, it's kind of what I'm looking for more so. This is a pretty shitty chart, I will say, but I'm showing you it works either way. So yeah, we kind of had that level up here. I'm gonna put it right at this area between the top and sideways right here. But it actually looks really clean. Of course it does, because the volume profile is helping us out. Now I think it's honestly safe to say that that's really all we can do with this. Why is it's on the 30-minute, that's why. I was wondering why it looks so janky. So I mean this chart isn't really honestly too good. We're like it's kind of filled in most of its areas. It's explored the house. It's went sideways for a while between these areas. So the only area
Right in the middle ground as well, isn't it?
Yeah.
Right in the middle range, yeah.
So maybe we could explore up here. We haven't spent too much time up here compared to the middle, but it looks like we filled the picture out, and we're maybe looking for a breakout soon. We're kind of looking for this ascending triangle to play out. We're getting closer to the full picture. We're ready to move on to the next piece of the puzzle. We're gonna go buy a new puzzle. So, when you get charts like these are ones that you would be looking to look at like throughout the week. Like, has it broke out yet? Can I play the retest? Has it broken down or is it broken up? Whatever it is, you're not necessarily looking to play levels on these type of charts that have completed the full picture. You're just looking to play the breakout, the trendy type days. So yeah, we have this level here that we'd be playing puts off of. We have this level we've been playing calls off of. If it breaks through this supply zone, we can play calls off the retest. We can play puts off this, but these are really our only plays. So we'd be looking for. Let me see, where's the marker? I never can find this thing ever. All right, here we go. So we would be looking for a rejection here, possibly a double top. Then we could look for calls off here, maybe a double bottom and then calls, or a single touch then calls. We could look for a breakthrough then retest, and then we get calls, or we could look for a double top here then puts. We're just playing off these levels. We don't want to make it too complex. We want to be just playing off our levels. Look for the double bottoms, the double tops, the retest. There's only like 4 or 5 things that can really happen, so don't overcomplicate it and kind of look what the charts are really setting you up for. Now what I will do, now that I'm kind of done analyzing this chart, is I'll go on to the daily time frame, and then I'll throw up volume pressure, which is the volume indicator I use. And I'm going to be looking for any anomalies. You kind of have to drag the fucking picture way over, because otherwise you get shitty data, which is kind of annoying, but oh well. So we have small candle, large volume, so we get the rejection, it comes down, it gaps down, yada yada yada. This candle is fake as well. Super big candle on lower trending volume, and it's larger than this one. So there you go. That's blatant for.
I just want to make sure you're not asking questions.
I 100% am.
Okay. Okay, cool.
So who's asking questions? Is it in the chat?
No, it's in the text here. Think Snay and Army Dude.
When you look for bounces, double tops, etc., do you watch for those in the 1 hour, 4 hour as well? Yeah, I mean, really, if you can find them on any time frame, then they're valid. 4 hour is obviously more powerful than the 1 hour. Daily is more powerful than 4 hour, etc. However, I personally find the 1 hour to be the best for me. Now you can go on. I really only suggest the 15-minute and the 1 hour for validation, but the picture is more so going to look the same either way. Now if we're breaking through a level, so say if, oh, one sec, sorry. So say if we're breaking these levels and we break down from them, I'm going to be looking for a retest. Say if we break through this demand and we test it as supply, I'm going to be looking for a retest on the 1 hour and the 15-minute. Because in the 15-minute, you can kind of, it's easier to spot candles that are rejecting right from it. But the 4 hour works as well if you're going to be charting in general. I wouldn't necessarily look for double tops exactly. I just find the 1 hour to give me the most bang for my buck when it comes to searching for data or, I guess, like the plays I'm looking for. You know what I mean? Makes sense. That'll be great. How to find true value gaps or imbalances? That is really super easy, and all I'm gonna do here is just you're gonna be mind blown, dude. So essentially, imagine you're gonna be like, what? Let's see here. What? Where's the reverse bone? So we have here this huge area that blew up out of nowhere. Any area that's kind of like not so wicked up by previous candles is a fair value gap. So like right here to right here is all fair value. Like it has to be explored still. I mean that's not extremely accurate, but that's like basically your fair value gaps 101. You wouldn't be targeting right here because it's like a super small fair value gap, but anywhere that's not really wicked up, you're kind of trying to snipe. Now, if you were to talk to somebody who did like ICT trading or whatever the fuck like you ever want to call it, just essentially basic technical analysis, then they'll probably like think I'm absolutely, yeah, exactly. You're just looking for a long candle. That's literally all it is, dude. Is you're looking for a super long candle with a lot of area beneath it that hasn't been explored. That's really just it. And you can look like, yeah, I think you understand. You're just looking to target areas that haven't been explored a lot. Like you can see here, here would be a fair value gap. Right here from here to here, that ended up getting explored. We ended up coming down here and kind of exploring this whole area of fair value. Although there is wicks between, there's kind of like little bits of fair value areas. So eventually it comes back down, finds the value. Now we kind of have this area up here. We can find some value. You could say, this whole range right here, but yeah, they're essentially just areas that need to be explored. I like to say areas that haven't gone sideways a lot. And that's basically what you're looking for. You can kind of see we've kind of filled in all the fair value down here. We've kind of went sideways. Like there's not really we've went essentially an area of fair value is you haven't really went sideways there fully yet. So you're looking for these long candles, like you said, and when fair value starts to move up, you can kind of figure out where the next area is going to be. However, I do believe this is probably going to come back down again to fill into this area right again here. Then we'll probably move up, test this area, yada yada yada. You get what I'm saying? Gap ups and down also count as gaps. Yeah, gaps do count as gaps. That is true. I'm assuming you're saying gaps comes fair value. Yeah, but I want you to understand. If you were to talk to somebody with ICT who does ICT, they're targeting these fair value gaps as areas to buy from. They're not targeting as areas to like. They're not targeting these areas as, say, if you enter a put here, they're not targeting the fair value gap. What they're doing is they're entering at the fair value gap. They're buying calls right here. That's how they run it. So they kind of run it a little bit opposite. I personally like to target fair value gaps. They use them as, yeah, exactly. Yeah, they use that as entries. I use them as targets, but that's because I don't really understand. They're super zoomed in when they trade. They're looking at like the 1 minute and 5 minute time frame, so they're kind of like they don't look at the 1 hour supply and demand at all. They don't understand the bigger picture. I mean, I could just be speaking for a few. I know some might absolutely destroy the 1 hour and larger time frame, but that's what I get from them whenever I see any type of content or talk to anybody, like in a Discord that loves that type of shit. So yeah, FSLR is pretty dog shit. I don't really like this, but yeah, I hope that makes sense, kind of. Let's move on to the next one. So yeah, I have this watch list that me and Canadian do, where we just kind of put everything that's more so liquid and they follow levels pretty well. These are all the tickers that are good. Smart money concept. Just look it up on YouTube, dude. It's like way too. It's, I don't know. Yeah, you can stop it, Frederick. Yeah, no worries. That was pretty good. I kind of went through supply and demand pretty quickly there. That wasn't the best example, but um, that was a decent one, I guess you could say. But yeah, I'm gonna keep going through a bunch of them. Hopefully, I can find some better examples here. Hopefully, get Rob a good one. Let's see. What about meta? Thank you, man. I appreciate it, guys. So as we can see here, this is awesome. Actually, we kind of have this zone of supply right here. Again, supply. What are we looking for? Areas where it runs up a ton and then it somehow manages to stop. Like this level is important. It's essentially like stopping a train. Like Spider-Man comes up, puts up his webs. All of his webs are right here, and he's holding the train back. And this is the area where you would expect some like rejection from. So we can label this really easily. It's just areas where it keeps rejects from initially, and then we'll just look at that. Rejects from it again, rejects from it again, rejects from it again. Just areas where it's really pivoting from. Now we do break above it. And we were talking about this. What happens when we break above it? We do not play. We don't just chase. If it breaks above and we get candlestick above, we're not looking to just jump right in. That's horrible. Do not do that. We're looking for a retest of the zone to get into call. So it came down here. It came pretty damn close, within like 20 cents. So I probably wouldn't have entered simply just for the reason that I'm looking for excess. I like to enter on excess. I like to enter on those wicks into the zones. So this wouldn't have worked out for me. But if you were to look for retest and you like to average into your positions, maybe you would have bought one contract right here, and then you would have bought your second contract right here, and your third contract. Like you're averaging into your positions. So in case it does reverse early, you would have gotten into this one. But yeah, you're looking for the retest here. We do have sometimes with sweet dollar. We do have sometimes double retest, so we buy when the price crosses the breakout high rate. Yeah, exactly, man. But no, wait. You would buy at the retest, and then you could average in more at the breakout high if you wanted to. But yeah, yeah. That strategy does work out well. You could do that strategy, but I don't do that one. Essentially, what he's saying is you would have looked for a double bottom, and then once you get to this, like, so this is his idea here. So it comes up, tested once, comes up, then tested twice. He would have entered calls right here at this break of the level. That actually, although it kind of gives me bad rep, this is a shitty chart. It does work out a little bit. It's a good strategy. So he would have entered calls on a candle close above this little zone right here, assuming he would be assuming that the chart would be continuing to go in a trend. Yeah, Canadian's chart, he's probably just burning through tickers right now, doing what I'm doing, but extremely more efficient because he doesn't have to explain it all. So if you think my voice is annoying, just watch him and turn the camera off, or turn the sound all the way off. He's definitely just flying through some tickers, just doing what I'm doing, or so. So meta, shitty, I don't like it. It can work out, it's not really like I want to find it near extreme, but it just broke an extreme, and it's not necessarily like as good as Apple, Google, or Microsoft. I find those to be more efficient at following the levels. AMD maybe. Have a good girlfriend. That's awesome. I love these. So I just got. Actually, I'm not gonna. Not telling you about my personal life. In case there's anybody in here who actually knows me. So we see this blatant trend line. I probably shouldn't say blatant because some of you might not see it. I don't want to step down in here. Yeah, this kind of overall idea of supply moving lower and us rejecting lower. And then we kind of have this more so demand is somewhat in the same spot, maybe falling a little bit. But yeah, we kind of have this wedge here. It looks like we're at the extreme, so I'll actually add this onto the watch list probably. This will be a good one. I'm gonna be looking at the daily volume. We're kind of more so on a decreasing trend right here. Kind of seems like the trend's dying out. Got a doji, medium volume, indicates a reversal. We're at a demand zone with a doji. What I will do is I'll pull up commodity channel index. This essentially just shows you what the chart should have, like the amount of volume that would be going behind these plays normally. So let's see if we see any type of divergence. I use this instead of RSI or any type of. I don't even know what the other ones are called, to be honest with you. So yeah, this one kind of just gives me more truth behind the ideas. But yeah, we're gonna be doing this one. Doesn't really look like we have any type of divergence. I honestly thought there was gonna be bullish divergence. I'd like to add places to watch that have bullish divergence because it always works out 9 times out of 10. But it looks like we're not necessarily getting it. Either way, we're going to be playing this one, so yeah, let me just chart it. And I just realized you guys are looking at my entire screen. So I'll answer questions at the end of this, but I want to make the screen bigger so it's easier to kind of see. So let's see here. Up with 1 hour. We have this pivot zone right here. We also have this pivot zone right here. Obviously, there's some type of influence here. Excess got rejected right here. This happens to just line up with this. So this level kind of has some significance. This is a good demand zone. However, it doesn't look like we just tested it. So we might not be able to get a retest again. But it's a good level to, like, we could play puts from 90 down to 88. Like, that's a lot of money to make. So we're kind of at the bottom, like, we're targeting the extremes, and we're getting pinched right at an extreme right now, so this is the type of play I love. If this, like, this is why I encourage you guys to look at the watch list, because say if this play doesn't work out tomorrow on Monday or Monday, yeah, Monday. Say if this play doesn't work out on Monday, there's a really high chance it'll work out on Tuesday. And I'm not gonna. I never upload the same chart twice and 2 days in a row. So, yeah, you could miss out on this simply because you didn't look at the watch list, but it'll probably work. So we see this level right here. We got a little pivot from. Definitely a nice pivot right here. Definitely a nice pivot right here. Just bouncing straight off. Bouncing straight off again. This thing's flying straight down. Look at these huge freaking. Well, these would be red candles for most likely for you guys. Me and UK Rob got the cool charts. So we have these nice reverses right here. So it's absolutely just rejecting the idea of going through here. It bounces off beneath it here, bounces off beneath it here, tests it again here, rejects it here. Like you can see, pivots off it right again here. This is a good level where we're just looking for pivots. Like this would be a good level to play pivots off of. Now we're getting. So this is kind of giving me like a picture in my head of a falling wedge. It's not really too perfect. We do have that trend kind of dying in the daily volume. We were looking at that daily volume before. It's kind of down a little bit. Just selling's not looking too well. But again, we're not getting anything crazy from the buyers just yet. And it looks like our supply is kind of getting squished against this demand. So once this level continuously moves down, it eventually comes in here, it'll blow either to the downside or the upside. But this is an important level. Put that down. So we have that there. Now we have this.
The time frame that you're on there now.
Yep.
Where you're going back to like the sort of 13th of April. Would you say that would be roughly as far back as you would go, or would you take in more data about what's your kind of range?
I mean, if this level were to have played out a lot beforehand, like rejected here, then yeah, I would totally include it, but it just so happens to not be. And you would realize that this is happening a lot between charts right now because we kind of just more so had to break out. Like if you look at SPY or QQQ, for example, we're kind of like breaking out, I guess you could say. So you would see it more often than not. So yeah, we kind of just get like a month's worth of data, right? Yeah, it's precisely a month. We got a month worth of data here.